Hey everyone, welcome back to the channel. Today we're diving deep into the fascinating story of Ghana's currency, the Cedi. It's a journey filled with highs and lows, but right now, the Cedi is making headlines for all the right reasons. We'll explore its history, unravel the mysteries behind its recent surge, and even dare to project where it might be headed in the near future. Let's start at the beginning. The Ghanaian Cedi isn't as old as some currencies, but its history is certainly eventful. Before the Cedi, Ghana used the Ghanaian pound, shillings, and pence, a legacy of British colonial rule. But in July 1965, Ghana's first president, Dr. Kwame Nkrumah, introduced the Cedi and Pasewa, ushering in a new era of monetary independence and adopting the decimal system. The name Cedi itself comes from Cedi, the Akan word for cowrie shell, which was once a form of currency, and Pasewa represents the smallest denomination inspired by gold dust. Now, the Cedi's journey hasn't always been smooth sailing. Over the decades, it faced significant challenges. We saw periods of high inflation, massive fiscal deficits, and a heavy reliance on imports which constantly drained foreign exchange. These factors, combined with fluctuating global commodity prices for Ghana's key exports like gold and cocoa, often led to a weakening Cedi against major international currencies, especially the US dollar. There were even multiple redenominations over the years, a stark indicator of the currency's struggle to maintain its value. But fast forward to today, and the narrative has dramatically shifted. The Ghanaian Cedi has become a standout performer, even being named the world's best performing currency by Bloomberg in May 2025. So what's behind this remarkable turnaround? Let's break it down. First up, let's talk about gold and cocoa's golden run. Ghana is a major player in the global gold and cocoa markets. Recently, we've seen a surge in international gold prices, with gold hitting record highs. This translates directly into more foreign exchange earnings for Ghana. Similarly, while cocoa prices can be a bit volatile, they've also remained elevated. More dollars coming into the country means more supply, which, strengthens the Cedi. And it's not just about prices. The Bank of Ghana has been strategically accumulating gold reserves, boosting its holdings significantly. This isn't just about having more gold, it adds intrinsic value to the Cedi and signals stability to investors. Plus, efforts to formalize small-scale mining mean more gold is legally exported, further increasing those vital dollar inflows. So, let's talk about fiscal discipline and debt relief. The government has really been working hard on fiscal consolidation. Basically, this means they're cutting down on excessive spending and managing public finances more prudently. This kind of discipline honestly is crucial for restoring confidence in the economy. Now, here's something important. Ghana's debt restructuring program has provided a much-needed breathing space. By temporarily suspending external debt servicing, the immediate demand for foreign currency to pay off debts has significantly reduced, and that's taken a lot of pressure off the Cedi. This, together with ongoing support from the International Monetary Fund, has really boosted investor confidence. Rating agencies are even upgrading Ghana's credit outlook, which is a big deal. Next up, let's look at strong monetary policy by the Bank of Ghana. The central bank has been very proactive, They've maintained a tight monetary policy, including increasing the monetary policy rate to make holding cedis more attractive. Plus, they've also actively injected dollars into the market to ensure liquidity and prevent panic buying of foreign currency. Their commitment to price stability is really paying off. And speaking of price stability, falling inflation has been another key factor. When inflation is high, the Cedi loses its purchasing power. As inflation has eased, the Cedi's real value has strengthened, making it more appealing. Global factors. A weaker US dollar. We can't ignore external factors. A general weakening of the US dollar globally has also played a role. When the dollar loses some of its strength against other major currencies, it naturally makes currencies like the Cedi appear stronger in comparison. So, the Cedi's recent surge is a powerful combination of increased foreign exchange earnings from commodities, disciplined fiscal management, strategic interventions by the central bank, and a favorable global currency environment. Now for the million-dollar question, what about the future? Can this momentum be sustained? Most projections, including those from organizations like the Ghana International Trade and Finance Conference or GITFIC, suggest a cautious optimism for the Cedi's near future. They anticipate the Cedi to maintain its relative strength and, continue its recovery trajectory throughout 2025. This is backed by those robust macroeconomic indicators and the improved investor confidence. However, it's not without its risks. Volatility remains a possibility, especially due to domestic import demand and, potential shifts in global monetary policy. For sustainable strength, Ghana needs to continue on this path of fiscal discipline and, crucially, economic diversification. Relying too heavily on commodity exports, while beneficial now, can make the economy vulnerable to future price shocks. Investing in manufacturing, technology, tourism, and adding value to existing raw materials are really key to building a truly resilient economy. What are your thoughts on the Cedi's performance? Do you think this upward trend will last? Share your comments below. Don't forget to like this video, subscribe for more economic insights, and hey, hit that notification bell so you don't miss our next deep dive. Thanks for watching, and we'll see you next time.